What's up, guys? Welcome back to my channel. This is Tariq from TS Consulting Services, your trusted source for tax help, financial clarity, and IRS updates that actually matters. Today, we're diving into the most important IRS tax changes for 2025 and 26. These updates affect every taxpayer, and if you're not prepared, you could be losing hundreds or even thousands of dollars. So let's get right into it. TS Consulting Services is trusted source for tax help and updates that really matter. The IRS has officially released the 2026 standard deduction amount. And let's do that again. So now let's go into section 1, standard deduction increases. We see that the IRS has officially released the 2026 standard deduction amount. Single filers increased to $16,100, married filing jointly $32,200, and head of household, which is $24,150. This means more of your income is protected from taxes. Let's head into section 2, the new OBBB Act of Deductions. Starting in 2025, this is the big, beautiful bill. Big news here, definitely. Several brand new deductions are coming for tax year 2025. Number one, the overtime deduction. You can deduct up to $12,500 if you are single, up to $25,000 if you're married filing jointly. That is definitely a game changer. Number two, the vehicle loan interest deduction. If you purchase a US assembled vehicle, you can deduct up to $10,000 a year in interest. Number three, senior deductions. If you're 65 or older, there is an extra $6,000 deduction available to you. So this brings us to number four, SALT deduction increase. This is the state and local taxes increases. The cap is increasing up to $40,000 starting in 2025. Homeowners in high tax states, this is especially for you, and this includes Pennsylvania. Now let's head into section 3, mileage, foreign income, and more. First, we see that the business mileage rates for 2025 is increasing by 3 cents. Right now, it's at 67 cents, and it will increase to 70 cents. Now let's talk about the foreign earned income exclusion is rising to $132,900 for 2026. Let's talk about what is. The foreign earned income exclusion, FEIE, it's a provision of the United States tax code that lets us qualify Americans living abroad and exclude a certain amount of their income from the United States federal taxes. For 2026, a taxpayer can exclude up to $132,900 of foreign earned income. This means if someone earns $120,000 while living or working overseas, that entire amount could be excluded from the United States taxes. However, if they qualify, so let's talk about who qualifies. You must meet all of these requirements. Number one, your tax home must be in a foreign country. Your main place of business and life must be outside the United States. Number two, you must have a foreign earned income, money you make working abroad, like wages, salaries, or self employment income. And number three, you must meet one of these tests. The first test, the physical presence test. You live in a foreign country for 330 full days in a 12-month period. Or the bona fide residence test. This means you lived in a foreign country for an entire calendar year and you can prove your life is based there in that foreign country. What it does not apply to, it doesn't apply to investment incomes like interest, dividends, and rental income, pension income, military pay, income earned in the United States, income from a United States based employer if you work inside the United States. Why does this exist? Well, the United States citizens, no matter where they live, unlike most countries, the FEIE prevents Americans abroad from being double taxed on earned income. But there's a bonus tip here, housing exclusion and deductions. If living abroad is expensive, taxpayers may also qualify for foreign housing exclusion if salaried. However, we also see that the foreign housing deduction, this is if they're self employed. Let's talk about the transportation benefits that are going up to $340 per month. Let me tell you a little bit about what this means. Here, the IRS allows employers to give employees certain tax free transportation benefits. These are officially called Qualified Transportation Fringe Benefits. For 2026, the IRS increases the monthly limit to $340. This means an employer can provide up to $340 per month for an employee commuting costs. And the employee, what counts as transportation benefits? Well, transit passes like bus fare, subway metro cards, train passes, ferries. It also includes commuter highway van pools, qualified parking near your workplace, park and ride lots. So your employer gives you up to $340 per month for commuting, or let you set aside $340 per month tax from your paycheck. That amount is not counted as taxable income, meaning it reduces your income tax, it reduces your social security tax, and it reduces your Medicare tax. Let me give you a better example. An employer gives an employee $300 per month because the IRS limits is $340. The full $300 is 100% tax free. If the employer gives $400, only $340 will be tax free. The extra $60 becomes taxable income. Why does this matter for the tax client? Well, the client who commutes, especially in cities, can lower taxable income, save hundreds per year, take advantage of employers' offers for pre tax programs. Employers also benefit from it, like lower payroll taxes, attractive employee benefits. Okay, so now let's talk about Section 4, the IRS Direct File Program. The IRS has confirmed that the Direct File Program will not return for filing season of 2026. That means taxpayers will rely on software or trusted tax pros, people like me. To get an in depth explanation, I want you to check out my full video on YouTube titled IRS Direct File, the Game Changer You Didn't Know. So, if you need help filing your taxes, understanding these deductions, or maximizing your refund, I want you to reach out to me at TS Consulting Services. I file taxes for individuals, families, gig workers, and small businesses. I do it professionally and affordably, and you're going to be getting me. Don't forget to like, comment, and subscribe for more tax updates, financial tips. I'll see you in the next video. Thanks.